for the introduction. And as we are today at session 15, as Cesar Martin said, best scenarios for mining, read the landscape and thrive. My name is Ola Johannes Lind. I'm the CEO of World Miner and holding this session for today. So let's get started. So let's talk about interpreting the context of getting ready to mine, invest, and trade. So let's start by the usual way of traditional economic sectors and how they usually do this specifically. Some utilize methods to access these markets. There is the contemporary methods for evaluating markets and deciding investments are constantly evolving. This driven by advancement in technology and the increasing complexity of the business landscape. So here's breakdown of some of the key approaches. So traditional market research methods, surveys, focus groups, and interviews remain valuable tools for gathering qualitative and quantitative data about consumers' preferences, needs, and behavior. But most recent approaches is social media listening, is to analyze social media conversations and trends, provides insights into the consumer sentiments, the brand perception, and then emerging market trends. This, in one way, is feeling to be in tune with the consumer in real time almost. And then we have the big data analytics to leverage that large data set from different sources that could include the online transactions, website traffic, social media, to identify patterns and to predict market behavior. And then the new star in the room, artificial intelligence. AI-powered tools that can automate data analysis to identify market opportunities and even predict consumer behaviors with much greater accuracy. And this is where many of the things is leading now and in the future. And then we come to the decision-making in the investment. There is the traditional techniques, NPV, the net present value. It calculates the present value of future cash flow by considering the time value of the money. Then you have the internal rate of return. That determines the discount rate at which the net present value of an investment equals 0. And then the payback period. It measures the time it takes from an investment to generate enough cash flow to recover its initial costs. In today's modern techniques, scenario planning that develops multiple possible future scenarios to assess that potential impact or different events on investment's outcome. Another is the real options analysis that evaluates the flexibility and strategic value of an investment, considering the ability to adjust or abandon it based on future circumstances. And then we have the Monte Carlo simulation. It uses random sampling to model the probability of the distribution of potential investment outcomes. So it provides a more comprehensive risk assessment of an investment. But key considerations: data quality. How accurate or reliable is the data is crucial for a very effective marketing evaluation or investment decision. Because if the data quality is skewed, obviously the decision will be wrong. Ethical considerations. utilizing data ethically or responsibly is essential, specifically when you're dealing with sensitive consumer information. And then the adaptability. The business environment is constantly changing, so it's very important to be adaptable, to adjust investment strategy accordingly with the time. So by combining these traditional and modern methods, businesses today can gain a more comprehensive understanding of the market dynamics and make a much more informed investment decision that can drive growth and success. So investing and the movements in the crypto market then. So when there is a cryptocurrency project that has vesting schedules for allocated tokens, that means that the token given to investors or founders will not be available right away. Means they're locked. For a period. So over time or at a later date, they will be vested. So it's important to see this vesting schedule when you're considering investing in a project, so you can understand actually the main objective of these founders or the project, how serious the project is, and how well the tokenomics and the vested tokens are structured, not for the project or the project owners, but for you as an investor. This is very important because you want to have a highest return on the investment. So this is very important factor. And obviously in the tokenomics is to see the inflation of the and total supply. Because imagine you invest in a project, there is unlimited supply. Maybe that's not such a good investment for you. Inflation is normally not a necessary issue as long as low, as long as you are not planning on waiting to sell when you retire. It's also important to mention that inflation is used by many projects to incentivize network participation. This means you can sometimes avoid this inflation by staking or delegating your tokens if you plan on holding on to your tokens for some time. However, that sort of aggressive token inflation that used to pay liquidity providers in many DeFi protocols will probably cause several issues in the first place. Because with this token, it's the best to follow the wise word of the finance creator. Do not buy it, earn it. The DeFi token might just be the best example of how important the supply metrics of a token is in regard to its price. Because decentralized finance is one of the few cryptocurrencies that have a higher price tag than the main cryptocurrencies. And the simple explanation for this is that the demand for the token is much greater than its maximum supply. For example, say 30,000. Who wouldn't want to own a token that gives them say in how one of the best DeFi protocols is run? And the small supply is also why DeFi market cap is just 600 million US dollars. So the behavior of cryptocurrency and digital mining markets are complex but a fascinating topic. The dynamics and interaction, for example, between Bitcoin price and its mining cost are tightly linked. Some researchers has identified two types of behavior in the most famous cryptocurrency systems. Heuristics and random traders. Overall, the behavior of the cryptocurrency and the digital mining market is really influenced by many different factors. That includes technology, regulation, investor sentiments, and the price of electricity. As we know about mining, it's the process of creating new digital coins and putting them into circulation. This happens at a very slow rate. The electricity consumption from cryptocurrency mining has been increasing over time, and as we see now, global warming means that many power network is overloaded, means in open markets, like in the US, where the private sector has its own pricing structure, can be very expensive sometimes, can be very cheap another time, or in regulated state government regulated or owned distribution of electricity. Some countries very cheap, like Venezuela, even Paraguay and others. And in other countries could be much more expensive due to taxations and other things. So the aggregated mining power of blockchain affects also the market quality of the cryptocurrency trading platforms. So these characteristics in both markets have led to some label DeFi as the main cryptocurrencies of the importance group of Vibe. That would influence all the rest, which is quite arguable. But there is some favorable symptoms in this case. So, for example, a positive market for digital mining and crypto trading is often characterized by these key indicators. That increased trading volume is a strong sign of a healthy market, as people are buying and selling cryptocurrencies. Rising prices are another indicator, since it's driven by the market, means that investors are willing to pay more for digital assets. And a growing adaptation of cryptocurrencies by businesses and individuals is also a positive sign, because it shows that the market is becoming more mainstream. When it's positive news and media coverage, it also contributes to the positive market sentiments. When it's increased investment from institutional investors, such as hedge funds and venture capitalists, is also another sign of a healthy market. The improved infrastructure in crypto trading, such as exchanges and wallets, can also make the market more attractive to investors. So we can see that, for example, this last couple of weeks in Turkey, where they now have opened the licensing for crypto exchanges. And I think last week count was there has been 76 different crypto exchanges asking for a license in Turkey, for example. And this makes it more attractive to investors, in this case, crypto exchanges. And also the market condition in Turkey is very favorable for example, for crypto. Government regulations that are in favor for the crypto industry can also create that more positive environment for digital mining and crypto trading. But remember, it's important to note that the crypto market's currency is highly volatile and can be subject to sudden price swings. Therefore, it is important that you do your own research and only invest what you can afford to lose. And I cannot stress this enough. Let's move on. Metrics and indicators. So, while technical indicators could be very useful, their utility declines in the absence of other critical factors, such as one we outlined in the previous chapter so far. What else, or what's more, is that the technical analysis can suggest different trends, depending on the time frames when you're using and the way you decide to draw your trend lines. That said, there are two technical indicators you need to pay attention to when it comes to deciding when to pull out. Because the most important in crypto trading, even more so than traditional stock trading, is to have discipline, meaning stick to your plan. If you stick to your plan and have the discipline, your result will be much better and not play on the emotion. So in this case, say for an example, Bitcoin and ETH, the behavior. For instance, the cryptocurrency dominance is how much of its total market cap is accounted for by BTCs. Currently, I think it's around 60, 64%, and it seems to have been declining steadily since the past year when it was around 68. But last week we saw Bitcoins increasing its value 3.1%. That is a clear evidence of its positioning, and also because it affects other crypto values as more investors and capitals join the digital currency markets. And we can see that normally at this time period, the $60,000 mark for one Bitcoin is, you can say, the mark where it will, when it goes under 60, it's actually correcting itself most of the time. So it has been, when it's favorable and the indicators are right, is when we see the uptrend. But there is supporting lines normally around 60. Because this also affect other crypto values, and more investors and capital joins the digital currency markets due to this effect. So it's very important to follow the trend lines and the indicators for BTC, because it's the market mover in the crypto industry. So keep an eye on pre-mine, inflation, and supply. So first action, and an important one, is to check that your crypto coin token had a fair launch, or at least an equitable pre-mine with a vesting schedule that doesn't make you run for the hills. Remember, you are an investor, you are not the one that started the project. Make sure that the inflation isn't too high, and see if there are any ways you can mitigate against it until you decide to sell. And be sure to take note of the circulating supply, because compare that to maximum supply, assuming there is a maximum supply. Otherwise, you might find your token suddenly losing value as additional coin starts to flood the market to drown out demand. There is one last thing, and maybe we can take for example, at the moment, I don't know if people has paid attention to the US election and Donald Trump and Democratic Party and the Republic Party, but we have a very interesting character in the US running for president. There was a president, but Donald Trump. And he launched this network called Trump Social. And this Trump Social, he has vested shares that has the same thing as in a crypto project, that in a few weeks, he has the right to sell part of his shares. Before, he has to keep them for a certain time period, and now that's going to come up for vested. So have a look at this in the coming week and see if he's selling or he's keeping. Because when they are vested and he starts selling, you will probably see a downtrend, since he might need capital for his different subjects when he's in, he has a lot of lawyer fees to pay and his presidential campaign. So it's important to see on these indicators I'm just taking this as an example. The same in the crypto industry is that to see when something is vested, specifically in a new launch project. And there is one more thing to take in account when you're finishing planning for your crypto exit strategy is what the technical are saying. An exit strategy relies on technical indicators. Other cryptocurrencies and tokens are gaining force daily, including WorldCoin. Mostly nowadays, with our partnership, WorldMiner and WorldCoin, that has changed the entire reality of digital mining and staking in artificial intelligence and blockchain technology sector. So once you know more about how to analyze the market, also learn more about the Easy Earn system by WorldMiner. It's a fast and simple way to invest, mine, and obtain profits in a short period of time for testing and trying, because you're not locked in for a long time period. So it's a great way to have an understanding of staking and mining, but not having a long lockup period. So by learning more about Easy Earn and the staking mining rewards and modality that is created by WorldMiner, has become the specialty for many thousands of miners around the globe. By depositing WM or the WorldCoin in this mode for a daily reward rate of 0.7%, and the distribution time of real-time liquidity for the WorldCoin token, and T+1 for the WorldMiner one. So Easy Earn products supports input and output of WorldCoin and WorldMiner currencies, and the WorldMiner currency, WM coins, can be used in Easy Earn staking to generate additional WorldMine coins. And even better is that WorldMine coins can be used in ATM mining to generate additional ATM coins. So we can say that's the engine inside the WorldMiner dual economic system. So the entry and liquidity coins are really the same. And WorldCoin coins can be traded freely on the secondary markets. So learn more about one of the WorldMiner's top mining methods, Easy Earn, or the liquidity mining, and the other ones, dual coin mining, and plan and try the ones that is most adjustable for your own reality. What I mean with that is, for example, if you have the objective to do long term, obviously you will staking in 1 month, 90 days, 180 days. So have a daily reward for a long-term objective. But sometimes we need liquidity. And Easy Earn is the easiest way not to lock up for long term, but for short term until that liquidity period where you do not need it anymore. You then go into the long-term objective of long-term mining and staking for more rewards and better returns. So your successful career as a miner could be a reality sooner than you think, and understand this new way of digital mining with WorldMiner, with artificial intelligence, OpenAI, build network, and with WorldCoin. So once again, thank you very much for being with us today. And you can access our platform, worldminer.io, or any of our social media to know more about our unique advantages, not only what WorldMiner offers, but project yourself as a successful digital miner. Thank you. This was session 15. I will hand it over to Cesar Martin for the closing of this session. Thank you.
Thank you so much, Ola. We've been through an interesting session about reading the scenarios and take advantage of them. Thank you so much. We have some questions from our members here. Laura asks, What are the potential legal considerations and compliances issues related to staking cryptocurrencies?
Yeah, obviously, depending on where you are in the world, and this comes to any kind of digital currency you are exploring, is that different countries has different regulation when it comes to taxation for profits you're making either from crypto trading or mining. So if you have an excess gain, for example, we can take the Nordic countries where you have to report every transaction, and that comes in play this fall with the MiCA rules in the European Union, where every transaction from an exchange has to be recorded and how do you say, it needs to be subject under the review of the governments. So they can see that there is a consumer protection, but also the ultimate motive is so they can tax the individual when he does a gain in, for example, crypto trading or crypto mining. Because when you're mining coins and when you're selling the coins, if there is a profit, then different countries will have different tax incentives to take taxes on this specific transaction. So it depends on where you are in the world. We, as a miner, is not obligated in your country, if you're not in European Union, to send this data to the tax authorities. It's the obligation, as the tax law is written in every country, as a tax resident, for example, in the US, you must submit in your taxation report any kind of holdings, assets holding you have either in the US or abroad, for example. I hope that answered the question.
And you mentioned recently the case of Turkey, which is moving forward towards a legislation, right?
Yes. So, for example, in Turkey, it's actually legal to utilize cryptocurrency as a tender in for a transaction for trading. I mean trading of purchasing something in the country, for example. And this has obviously a lot to do with the high inflation rate they have in the country. And now the regulators and the government have opened up for licenses. So there is now, again, you can obtain a regulatory license as a crypto exchange in Turkey. And a lot of exchanges of the big names or have applied, and you will also see smaller exchanges because Turkey has a very good market for the crypto enthusiasts.
We have a question from HDF CGDF. How should investors prepare for potential changes in staking rewards or network security issues?
Well, two things. When it comes to security issues, since we are a decentralized DeFi application as an end user, your wallet, it's the privacy from your side is 100% protected. We have no access to your data, only you. That's why, for example, when you have the password, if you lose your password, sorry, you're out of luck. You cannot recover your wallet. It's like losing the dollar bill on the street. If somebody takes it, somebody took it. So this is important. You are in control of your wallet. And when it comes to security, we are utilizing all the necessary compliance when it comes to data protection and also server protection. Since we're utilizing blockchain and we are doing it on the chain, we then have everything decentralized. And that's very important because to hack a decentralized platform is one of the most difficult things you can do anywhere because it's on so many nodes, all the information, and you need to have the same security code on all these different places at the same time to be able to access it. when you see data hacks, for example, you have seen in some exchanges and so on, it's because many of the crypto exchanges, believe it or not, is actually not a decentralized exchange, it's a centralized exchange, just like the New York Stock Exchange is one server that has do it and utilizes all the trades, and we call it a hot place. A wallet that you have, for example, with World Miner is a cold wallet, means it's not connected to the exchange, meaning that way nobody can hack the central exchange and then get access to your currency or coins. So that's a very big difference and a very important factor in this case.
Thank you, Ola. And a final question by Patricia. What are the primary risks associated with cryptocurrency staking, and how can they be mitigated?
Well, there is different ways. If you see in some exchanges and so on, they offer staking, but staking with a specific cryptocurrency. And that is where you have a much greater risk than you would have, for example, with World Miner, because World Miner is utilizing the USDT as the principal, meaning that you stake the USDT that do not fluctuate. It doesn't go up, it doesn't go down, it stays around the $1 mark, means that your investment in to the platform is in USDT, meaning when you have done your staking, you have your USDT back, meaning that you have not lost or you have not gained from your principal. But because we are doing dual coin staking, where you achieve and receive as a reward on a daily basis, and coming back to the question before that I didn't answer one part, I will come to that now, is that you are then receiving WorldCoin and you're receiving WM that you can mint ATM. Means now you will have two different cryptocurrency that is your daily reward when you stake, that you then can gamble with. These two will have a preset value at the time when they receive it in your wallet as of the staking of the amount of USDT you did as for the staking period. That will not change. But when it's in your wallet and you have received it, obviously these two coins can have volatility. It can go up, it can go down. But since we are specifically chosen these two cryptocurrencies because OpenAI is the network we're building on, and WorldCoin is the coin that has been started by OpenAI for a specific purpose to grow, because in the AI era, where computer data power for AI is not going to decrease anytime soon in the next 10 years, is only going to increase. And with the ATM coins building on the second phase with proof of works, we are adding that computational power into the network, meaning that the ATM will have a much higher value in the foreseen future as well. So you have the value left of your initial principal, and you have two different currencies, cryptocurrencies, that is poised for the future of blockchain technology and AI, where the global is now taking the participation from end users to private companies to public companies to governments, where everything is driven to make a more efficient world. But hey, yes, we make a more efficient world, but it needs data computing power, and that's where we are very well positioned to cater to these specific needs. And coming back to that question that we had prior to this one, is specifically in adjustments what I just mentioned when it comes to staking, and that we do not have the volatility with your principal because it's USDT. You would have with your reward, but That means you haven't lost your principal, means that you're not staking a normal cryptocurrency like Bitcoin or ETH or whatever it is, because that one will go up in value and down in value. Maybe that answered the question.
I believe it did. Remember, all of us here, we can stay in touch and share more questions and doubts at our Telegram communities, World Miner Global and World Miner Brazil. You can ask your questions at any moment there, and our support team will answer immediately, or some of us. And also, as usual, I invite all our spectators today to join us at our session in Portuguese at 9 p.m. Dubai time. Thank you so much, Ola, for another amazing explanation.
Thank you so much, everybody, and looking forward to see you on Monday in session 16.
Bye-bye.